Welcome. Good morning, May 1st, 2023. Welcome to the daily BitLab stream. As you can see, I'm kind of changing some things up on the actual visuals of the screen. So let me know if there's any issues with audio, visual, or anything. I hope you're feeling well. Throw a 1 in chat if you had a good weekend. Throw a 2 in chat if you were in the charts all weekend and you didn't step away, which can be a good thing if you're learning, but we got to remember, we got to keep our life balanced. My name is Kellam. Welcome to the daily BitLab show. So happy that I could be here with you. I'm so happy that you're here with me. Well, we've got some really great things lining up this week. I was in the office this weekend, and we are doing everything that we can do possible to get the BitLab, the new BitLab, launched. We're looking at, hint, hint, this week. So I've been alluding to that for a while because I am leaving this Friday back to New York. So we're doing everything we can to get everything rolled out for the brand new BitLab Academy website, new courses, and just I want everybody to know once we launch, it's not the end of the line for the new courses. So if there's more stuff that you want or expected in there, there's going to be more stuff. I mean, continually being added over the course of the next. Indefinitely, really. I keep wanting to say over the next couple of years, but we're going to be building this continually. We're starting now with a lot of the, sort of all the beginner stuff as well as advanced strategies. So we're going from all the way from Bitcoin and Blockchain 101, which will be free access for everybody. All you have to do is register for free. And then taking all the way, further through technical analysis, candle patterns, price action, trading strategy, psychology of trading, on-chain data analysis, and I'll give you a peek at that here in a little bit. But before we get into all that, have you hit that like button, hit that subscribe button, and ding that bell. Come be a part of our community. If this is your first time here, I can guarantee you it's not going to be your last time because we try to do everything we can. We really make an attempt to provide honest value on this channel. We don't want to just spoon feed people, although we do break down TA and price targets and that sort of thing. But what my main focus on this channel is to bring you along the journey, to walk you through what successful traders and investors do in the Bitcoin and crypto ecosystem. So if there's something you don't understand or something you don't know, let me know in chat because I want to make sure that we're addressing those things. So if I'm talking about support and resistance and you don't know what that is, it's okay. We have people from all sort of points in their journey in the crypto ecosystem that are here and part of BitLab Academy. Whether you are a beginner just tuning in to your first crypto show ever, and you don't know what TA is, or you don't know what indicators are, it just sounds like a different language. That's okay, because we break it down for you. If you're further along your journey and you're just, you're trying to just sort of reinforce your knowledge about, where price may be going, what we should be looking at, a different look at charts, we've got that too. So I just want to shout out everybody that's here with us on a daily basis. Thank you all very much. I'm going to shout out everybody in the audience, in the community here. We got Karen Swigart Harris, always in the house. Shout out to you. Karen, are you going to the BitLab? How about this? Everybody in the chat, if you are going to Bitcoin, I almost said BitLab Miami. If you're going to Bitcoin Miami, let me know. Maybe we'll organize a little meetup down there for the BitLab and BitSquad crews. It'd be nice to see people, shake hands in person, and walk around the space together and talk crypto and talk life. And, connect as people, because that's what we are, right? We can't only just be data processors here looking at charts, right? We want to be people too, because at the end of the day, think about it. The reason why we want to find success and financial freedom, or Crypto Jeb so eloquently coined it, financial sovereignty through crypto and trade and make money. Why do we really want to do it? We got to ask, what is our why? Why do you want to do it? If you don't have an understanding of anything in life, whether it's crypto or anything else, if you don't have an understanding what your why is, then it's very unlikely for you to succeed. Whether you're looking to lose weight, whether you're looking to put on weight and bulk up and, muscles and work out, whether you're trying to learn a new skill, you're trying to learn to trade, if you're trying to understand crypto, if you're trying to strengthen your relationship with a friend or a lover or a family, if you don't understand your why, then the how is almost impossible, because the fuel to get to the how and to get to the action from the how Like if you don't know how to do it, you can learn how to do it. But if you don't have the why figured out, then you're not going to have the fuel, the passion, the energy to really sustain through the ups and downs, because anybody that's here in crypto will tell you, if you've been here for longer than, even from the beginning of the year to now, if you've been here at any length of time, you know that on the one hand, there's a huge amount of attraction and a sort of, I don't want to call it a greedy allure, but opportunity allure to a crypto, because this is, I do believe, the most important and impactful technological innovation of our lifetime. I sort of attribute it similar to looking at how the Industrial Revolution, which, was precursors to the technology we have today, right? It allowed us to build large cities and have people work closely together and have people isolate on specific jobs and master those jobs. And then, we get computers and calculators and then the internet. And then now we have blockchain, and blockchain is the rails of the future. And so us all being involved in it is very exciting. But if we don't understand, just separate the excitement. If we don't understand what our why is, then we're never going to truly be able to impactfully in our lives implement a how. So I just want you to all ask yourself that question, because to me, of course, I want to make a lot of money. I've made good money. Okay. But what's my why? My why is so that I can have freedom of time, so that I can buy my mom a house, so that I can send my nephew to college. My why is so that I can take care of those around me. And we can go a lot deeper than that, because we can go on a whole other conversation topic about the governments and control and monetary policy. But if I root it in my deepest why, it's my family, taking care of my family. So if your why is partially your family, put in BitFam. Do hashtag BitFam here in the chat. So shout out to everybody here. I want to say keep it going. We got Karen Swigart Harris, Alexandra G. What's up? Learning. Who else we got? Mr. Blake. We got Eggy Monster. There's so many familiar names in here. I love it. Total Clinic Solutions, Jackson Crawford, Crypto Brat, Crypto Kid, Livio Capitanu. Capitanu? Brad Guidell, what's up? Looking forward to seeing you in Miami too, my brother. Joey Danielle, Eddie Money. Eddie Money's in the house. Money. Taylor Brown, what's up? Who else? Blazing 2Js in the morning, blaze 2Js at night. I don't know if you guys know that song. Blaze 2Js in time of peace and 2 in times of war. Blaze 2Js before I blaze 2Js, and then I blaze 2 more. Old school Bob Marley song. Crypto Brat. Who else we got? Crypto 420. That's a good one to wrap up all the Blazing 2Js username song out of. Justin Eubanks, what's up? Who else we got in here? Just a couple more. Gia S. I knew you'd be in the house. That was the last name I was looking for. Mitch Shaw, John Connor, Paul Crockell. What's up, everybody? All right. Well, you know what? We got a lot to talk about today. It is May 1st, 2023. We are officially living in the future. I remember back in high school writing on the top right-hand corner of my page where you put your name and date and all that kind of stuff. And I remember writing 1995, and I could not believe it was coming up to the year 2000. And here we are in May of 2023, and we're a part of one of the most exciting innovations of our time. And all of you here, shout out to all of you. Krypton Caravan Company, how you doing? Matt C., Mellow Fellow. We got everybody in the house today. All right, well, May is shaping up to likely be a very large month. There are some signals. I feel like there's like a bug in my hair or something. We got some pretty interesting data points to look at, some signals that suggest that there could be some pretty big volatility inbound for May. What does that mean? Volatility. Volatility is the speed at which, the quickness at which the sort of movement of price action in an explosive way. So if we look to the charts, I'm going to pull this up right here. Bing, bing, bing. You can notice I changed up a little bit of the layout on the screen. So this is down here on the bottom left. You see where my face is. I wanted to do it to where there was the ability to sort of take my face in and out, but also when my face is on, it doesn't take as much real estate from the charts. So what am I talking about volatility? Well, first off, let's go to our Bollinger Bands. And Bollinger Bands, let's go ahead and turn off the 4MA. We can double click on the chart, minimize that. Okay. Now, Bollinger Bands are these two bands here. We talk about this in one of the BitLab indicators course, where we break down volume and Bollinger Bands and RSI and stochastics. And we break down a bunch of different indicators as well as the BitLab indicators. We also break down market cipher. We break down some of the most commonly used things. So we can really provide you an understanding of what these indicators are, what they're reading, so that you can create a strategy for yourself that you understand. You're not just looking at something crossing and going, that crossed, I'm going to buy. That's not a strategy. What a strategy is saying, okay, I have X, Y, Z, 1, 2, 3, 4, 5, 6 strategy. And, for instance, if I zoom out here, I saw this earlier that I must have put on here a couple months ago. Where's it at? Right here. This is the strategy. Looking at the broader context of the market, looking at the environment, being the different timeframes, macro, midterm, and micro, having a plan. Meaning you know what your entries are, what your targets are, what your stop losses are before you even take a trade, okay? And what's your counter trade to that? If you're looking to the upside, if it does go to the opposite direction, are you directionally focused so you're only taking longs? That's okay. Are you a scalp trader or small time frame scalp trader where you're taking trades and hedging your bets in both directions? That's okay too. You need to identify what your plan is. But then remove emotion. Remember to use fundamentals and data, right? Not trading because you're excited, trading because the charts lined up for that price action in the direction in a way that you thought was likely, and you caught the move versus jumping into a move. Technical signals and multiple confluences. So this gets back to what I was just talking about with the Bollinger Bands or support and resistance or RSI or stochastics or MACD. All of these things can be used in concert with each other. And we have volume, of course. This is, I will say, one of the technical signals, okay? And we can also use it as part of the confluence. But I put this as an additional one when I did this is because volume is one of the most important signals of interest in price action. Not only do we have volume across the bottom of the chart here, but when we have the VPVR, which is VPVR, actually, let's see, VRVP, it can be either one. Now we can double click on it. Now come here, it's row size. We're going to do 225. So there's a bunch more rows. You see that? Now, what happens here with the VPVR, we have volume across the bottom here, showing volume on that time period candle, as well as volume here as how much volume traded at these specific prices. And as you see, when I zoom in here, these move and change based on what is visible. So volume is so overlooked and not used as often as it should be, which is why I have it listed here as its own. You can use all your other technical indicators, volatility signals. I'm going to delete this again. That's why I had it off in the first place. So this could be here. But volume is an additional thing. I just have it on the checklist to make sure you check the volume. A good example of this, if you're looking at a head and shoulders, for instance, a lot of people will see a head and shoulders and say, just by the shape, that's a head and shoulders. Well, in some ways, and partially that is true, but in order to get a true head and shoulders and actually have the signal that you can stack the probabilities in your favor, which is what trading profitably is all about, which is what trading and not consistently being in the red is all about. So volume, when you're coming up to the end of a head and shoulders, if you start seeing an increase in volume, then you're getting a stronger signal that you're confirming that this head and shoulder is most likely to be a valid head and shoulders and is going to it will sort of break out. So this is an incredible, and this remains true for a lot of price patterns. For instance, if we look at these different, we got this descending triangle where we have a flat bottom, descending resistance. We have an ascending triangle, which is ascending support and flat resistance. But we can see at the beginning of this, when this broke down, a lot of volume, okay? But as this moved along, the volume started falling, and then it spiked. It really started climbing up pretty strong right towards the end of this formation. And this formation most typically breaks out to the upside. This formation most typically breaks out to the downside. We break all this down in BitLab Academy as well. Channels as well. We have channels, we have descending wedges. You can look at the volume in addition to not only the patterns on your chart, but also the signals that you're getting from the indicators, which all these indicators are doing is reading changes in data points on different price action times, moving averages, moving average convergence divergence, which is what MACD is, the strength of buying power or selling power. There's so many different ways indicators can interpret what's going on in the charts. And that's why it's important that you utilize a variety of different indicators and look at it on different time frames and sometimes even different exchanges, because you can look and see things and find spot or abnormalities or when things are stacking up in your favor. So when we're going into May, we don't want to just buy or sell because I told you or anybody else told you, because one thing, I never tell you to buy or sell anything. What I do is I share the strategies that I'm utilizing and that I have utilized and that from other very successful traders that I've worked with and talked with and built things with and also learned from, is that there's a certain pattern to people's successes in crypto or anything in life, really. And it's the strategy, it's the plan, it's walking through, okay, I'm seeing X, Y, Z. Okay, now that those three things, those minimums are hit, now I can look for my confirmations to actually take a trade. A green candle is not a confirmation to take a trade. And then, of course, double check your checklist, of course, and then you pull the trigger, okay? So now that we understand this, before we go into this potential May pump, and will we get a June dump, or will this price action continue beyond May into maybe end of June, maybe pull back in the very end of June into July? Well, let's look first. Let's take it at baby steps. Like, what about Bob? Let's baby steps, baby. We got to take it one step at a time. Let's go through some of the things that I'm looking at, that as I'm setting up. It's May 1st at the beginning of each month. What I do, because sometimes I get very sidelined by the news, and I forget to, and I'm not as focused on technicals as I need to be. And other times, I'm so focused on technicals, I lose sight of what's this number one thing here? I lose sight of the landscape and the environment. So we've always got to circle through these. Okay, you could be looking, you can get a great macro outlook, the first week of May. But by the end of the month, you're so sure that you know the macro outlook that you kind of stop looking at different time frames and stop looking at the news, and some things can go by the wayside. So let's talk about that. Let's jump in here with this, and let's do that. So let's go ahead jump back on here. We got Hope E in the house. How you doing? Dan T. I'm so happy to have all you all here. I'm very excited. I was barely able to walk. Yes, I said it. Really the last about 12 years, but no, I was really having trouble walking the last 2.5 weeks. I think I tore a ligament in my foot or something. Went to the urgent care twice. That's why I'm sitting in a chair rather than standing, getting the full background there with the logos and everything, only because your boy needs to sit. I got to take care of my body. And so I'm getting dings on my phone. What was I saying here? I don't even remember. It doesn't matter. When we're going into May, we need to make sure that we have a good grasp on what's going on, especially right now when everything's such on a hair trigger about, global economic uncertainty and this and that. But now we're getting bank failure, another major bank failure. I think it's the second largest in history, if I'm not incorrect, but it's either way, it's very large. But we have the FOMC meeting. We've got so much going on. So let's go ahead and dive into into some of those topics, and we're going to be doing a bunch of TA as well. So stick around. We're going to go through a couple different articles quickly. We're not going to be breaking them down, just sort of to bring up those points. And then we're, of course, going to be talking about Bitcoin and Ethereum and Cardano, XRP, and then you let me know in chat right now what some of the other coins are you want me to look at, and we'll do that total request live, baby, MTV style with the charts. so long as multiple people are calling them out. I'm not going to do every single one we see because we don't have time, but we've got a lot doing that. So before we jump in there, now that we've got 145 people in here, only 61 likes, hit that like button, hit that subscribe button, ding that bell. What are you doing? Be a part of our family here. Now, what I will say is before we dive into that, come over to my screen and we can see that right here. Make sure you come follow me at Kelly Kellam, which is Kelloy, Kellam. Make sure you're not following any of those fake accounts that are out there. Of course, make sure you come to the @Academy BitLab, which is the BitLab Academy Twitter page. Follow it, retweet today's post, retweet it on your page and hit the like button. On Friday, I will be drawing, we draw from the people that follow, retweet and like these tweets. We draw for free access to the BitLab Academy, sometimes lifetime, sometimes 3-month. We have access to the indicators. We've given away $100. We do some good giveaways here. So all we ask is that you participate in helping basically let other people know that there's this avenue that they can not only find out really what's going on in the market, but learn some of the processes and how to do TA and how to trade. And I'm going to start integrating some NFT stuff on the channel as well. I've got a couple people that are not just like, I'm not talking about shilling NFTs. I'm talking about the actual Web3 integration, some of those different things and different guest spots on the show. But the show, of course, is going to be primarily around Bitcoin investing and trading strategies. So come over here to the BitLab Academy page, retweet, follow, and like this. Now let's talk about what's going on here. Let's look right here. So I'm a little worried because Jim Cramer says this stock market belongs to the bulls. Now, the reason why that makes me a little worried is because we all know that Jim Cramer, it seems like everything he calls, basically you get an immediate inversion of whatever he says. So I just thought this was funny. We gotta worry now that he's a bull, but let's sort of ignore that. Let's look at the other things. I can't remember if these are in order or not, but we'll just go through them. So here we go. First Republic Bank. I do believe. Let's see. Yeah. So I do believe that JP Morgan took over First Republic. And as you can see, Silicon Valley Bank was $209 billion collapse. Washington Mutual, this was years. I think this is also adjusted for inflation, but $307 billion. First Republic is $229 billion. So what does this mean for the markets? Well, we do need to address the fact that we are having, the banking failures have not stopped. This is the fourth one, I think, this year. There was another smaller one, but we just need to pay attention to this. JP Morgan Chase taking on First Republic. So let's go ahead and continue here. Now, fun fact, this is from our boy Caleb Franzen. Excuse me. I'm going to be having him back on the show soon. But we could see no bank in history of fractional reserve banking, which technically right now we can call this fictional reserve banking because there is no requirement for banks to have a fractional. It's a 0% requirement now that they changed, I think in March of 2020, kind of under the noses of everything going on with the pandemic. So in the history of banks, basically there's no bank in the history of fractional reserve banking has the ability to survive a run on deposits. It's literally not part of the business model. This is important. They're not really risk managed very well, are they? Everyone talks about FRC, which is First Republic. Excuse me. God, man. Excuse me. This, SVB that, SBNY that. Who's he, what's he, it doesn't matter. No bank can survive a run in history. Now, the interesting thing about this is this tweet right here. This is really the point of this, is that depositors taking money out to find better yield somewhere else. And look at this. Look at this. 52-week change, U.S. commercial banking. Look at how much, it's not like some huge amount, but a 4.7% reduction in deposits on banks is hundreds of billions of dollars, if not trillions. Excuse me here. All right. So we need to pay attention to what's going on in the banking industry. But one of the things I will say about this is the fact that we are all involved in Bitcoin, in the crypto ecosystem. We have to understand that as these things sort of play out, and we're seeing money, the flight from banks, as we're seeing it right now, especially this is just another sort of nudge in that direction of uncertainty of banks. That Bitcoin is benefiting based on the time, place, development, adoption, the fact that it's basically only had uptime, no downtime, you know, it's the perfect counterpoint to the banking system. There's two real hindrances to the true adoption happening in Bitcoin right now and the digital ecosystem. And that is the fact that there's not clear regulation in place for the digital ecosystem. With Bitcoin, it has been labeled as a commodity, so I'm not so worried about Bitcoin in that regard. But because it is still part of the digital ecosystem, there's still because there's some uncertainty about some fiduciary management, reporting. There's certain regulations that still need to be addressed and adjusted. And the fact that Bitcoin is still tied in with it is part of the digital ecosystem, digital assets ecosystem. If there's a very strong regulation against the rest of the ecosystem, it could have, a large impact on Bitcoin as well, even if it's talking about other things being securities. So we just need to pay attention to this. So the lack of regulation, but then also the biggest hindrance, really, that's a smaller thing, because we're seeing massive growth over the last 13 years, 14 years, despite that lack of regulation. But the biggest hindrance right now to get the true adoption up to where we are really excited is awareness. So all of you being here on this channel, BitLab Academy, being a part of this, it's not only important that you're on shows like this so you can navigate the markets correctly. It's so that it's not just my show. I want you all to watch a variety of different voices with differences of opinion about what's going on. Bull and bear, moon boy and super conservative, to get a good understanding and form what your strategy is, one, but also not just look at price action and TA streams only. But that's why I try to balance this with not just doing only TA on the show. We want to make sure, in order to really effectively navigate this market, we need to understand what these assets are that we are trying to invest in and trade and participate in for our gain. We want to be mad at institutions manipulating the market. Well, every time we buy, we are one of those manipulators. We just have much smaller capital. So the goal of anybody in the market is to make money. So if we want to make money, the best way we can make money in the market is to understand the markets that we're in. So I want you all to just tune into your humility a little bit. Sometimes even if I'm talking about something you feel like doesn't matter, or you want to get what's the price action today, we're going to get to that. We're going to be diving into a bunch of TA here in a little bit, but we need to understand the narratives that are echoing through the space, and how other participants are going to basically sort of gauge how other participants may interact with this news, this narrative, this sort of thing. So us being here on this channel together and going through these things and understanding what's going on in the markets also gives us the understanding and the patience in our own heart, and to know how far we've come from when we were not, I want to say against, but maybe we didn't really understand Bitcoin and crypto. Because if adoption, if the number one thing for adoption is awareness, then each one of us is a missionary in a way for the crypto ecosystem. And if we are trying to, I don't want to say bring somebody into it, but if somebody asks us a question and we're talking in circles, or we're talking like we're trying to sell it to them versus offering them facts, for instance, good example of that is, I don't want to get into that, but there's a lot of misconceptions about the market. A good example of this, I'll say, this is a different one, is the FTX collapse. Well, I don't trust Bitcoin. Well, if that's the case, then you should also be out of the dollar, because we're having banks collapse everywhere, and the banks are not the dollar, and FTX is not Bitcoin, right? FTX is basically like a car dealership. If somebody at a car dealership, the CEO at a car dealership did something bad, you're not going to absolutely, write off every car in the world because you don't like that car dealership. And so we need to understand that so that we can engage in effective discourse with our family members, friends, and, people on the train and in subways and taxi cabs and walking down the street, so we don't drive people away. We should be bastions of information about this stuff. So let's go ahead and move on through this now. So look at this. Bitcoin, this is just supporting that notion. The price of Bitcoin has increased 4 months in a row as the banking crisis continues. This is the coolest headline I've ever read, ever. Really, really is. I just never thought, I knew I'd see the day, but in 2015, 2016, 2017, it's just amazing that we're getting this now. This is amazing. We're turning a corner, and we need to be involved, and we need to not get shaken out when we get these oscillations in price, because, we look at this, push up. Oh no, it's scary. Push up. Oh, it's going to crash. No, push up. Oh, it's going to crash. Opportunity. And then this is the best opportunity right here. Anywhere in here or here were the best opportunities to get out of this market, understanding price action. But as I've said, we don't need to look at, these swings as scary. We need to look at these swings as opportunity, because tying back all the way towards the beginning of the show when I was talking about the volatility, and we brought up Bollinger Bands, and we're setting up for something that could be a very volatile move, which maybe down, slingshot up, maybe down, break all the way down. I don't think that's going to be the case, but I'm thinking it's getting more likely that we are going to be moving to the upside. Now, am I planning only for that direction? Absolutely not. I still have buy orders set down here at 24. Actually, it's a little higher now. It's about 24.6 all the way up to 25.6. I have a couple buy orders in this region, because in the eventuality that price action does come to these levels, this is a great opportunity. But I'm not putting every egg in that basket. There's still opportunities for this to find support in this region here, maybe dip a little below this, and then basically rocket up here into this sort of zone here between these two. Previous supports, current sort of resistance levels above us. Okay, so we need to understand that there's opportunity in volatility. Now, getting back to where we were, let's see, this is that. Now, this is what I was talking about. This is what all that was leading into, is this right here. So this chart right here shows volatility had ratio between spot and futures volume hits an all-time high. So what is this? Well, first off, what is spot? What is futures? Everybody, if you already know this, it's okay. Let's be supportive of those that don't, so we can support growth in this space. Spot is when for instance, if you're buying on Coinbase and you put in $10 and you get $10 worth of Bitcoin, that's spot trading. It's one for one. If you're futures trading or leverage trading or options trading, you are using a portion of your capital, let's say $10 or let's say $100, and you're borrowing money from the exchange to trade a higher exponent of that. So if you say you have $1,000, but you don't want to put it all in a trade because you want to keep some of it in your cold storage, or you want to use it for another asset, or you're just trying to protect your capital, you can use $100 and trade it on 10x leverage, and then you're only risking 10% of your capital. However, with that does come higher risk, because if you do that, yes, you're not risking your full $1,000, you're only risking $100. However, you're also incurring more risk on that $100 trade, because you're borrowing that other $900 for the full $1,000 trade that you're making, only putting up $100 worth of collateral. So you have a very tight stop loss. So the reason why this is important to pay attention to is the ratio between spot and futures volume hits an all-time high, saying that essentially the futures volume is far, far, far outweighing the spot volume. And so if that's the case, and this means that there is a lot of liquidation points and there's a setup for unhealthy movement in the markets if price action is pushed to those liquidations points. Now, when we look at this, one of the things we do need to pay attention to, and this is why it's good to kind of scroll through the news and see what's going on. For Crypto 420, I hear you. He said, where did he go? I get frustrated at times talking to normies. Is it not, let me ask you all a question. Once you've sort of forayed in, not just a week or two, but once you've been in the crypto space and watched, 30 or 40 videos, but long enough to have a basic vocabulary understanding, and you can look at a chart, maybe you don't know everything that's going on, but you're starting to understand the rhyme and reason. It doesn't mean you're a perfect trader yet, but you're starting to understand the space. And then you hear somebody that's completely outside of the space regurgitating some narrative FUD fact that they heard from Jim Cramer or from Janet Yellen talking about, well, Bitcoin was used for drugs. Well, you know what? Before Bitcoin and crypto was around, every drug that was ever bought in the U.S. was bought by U.S. dollars. So stupid argument. At the end of the day, humans trade things for different things, and the fact that it had been used for drugs at one point is an absolute certainty, because we are humans and we use things to trade for things, and different humans are using Bitcoins, or different humans are doing different things with Bitcoin and crypto. Same thing with the US dollar. Think about how many billions, hundreds of billions of dollars are being housed in JP Morgan Chase and other large banking institutions in the US that is basically laundered money from Mexican drug cartels. But that's US dollars. That's not Bitcoin. How come nobody's talking about that? So yeah, I get frustrated. I try not to get fired up talking to somebody that is a normie FUD campaigner, and they don't realize it. They're just regurgitating something that Janet Yellen said. So very frustrating. Put a 1 in chat if you've ever had that sort of predicament where you're at one time, you not snapped, but you got too passionate and got argumentative with somebody. And then put a 2 in chat if you got to the point where now you're able to understand that they don't know what they don't know, and all you can do is plant a seed, and you can be, just have them look at something or tune into something, or you don't need to get in an argument. But I'm still getting to get to that number 2 as much as possible. But I still go back and forth because I'm so passionate. But looking at this, the reason why we sidetracked there, tangent. We see this large increase in spot, and understanding what's going on in the news and the developments in the ecosystem and the fundamental advances of the space and different regulations and different trading opportunities. In this case, the volume in Bitcoin futures trading is 9 times as high as is in the Bitcoin spot trading, making the market more responsive to price fluctuations. Well, with this, the interesting thing about this is recently, I think about 2 weeks ago, there was a change in the CME futures to where there could be a one-day finality on the futures. So you could do one-day futures rather than doing monthly or quarterly, these longer periods. And so the volume has gone up. Now, with that, there's a lot more liquidity. And so I would be hesitant to make a direct call or analytical point about what this could mean, because if we look historically, it's slightly different in how this is going to relate to the volume in previous time, because there is different futures products available then than now. So we do need to pay attention to this. Now, if we look at specifically at leverage, now this is futures. If we looked at leverage, we do want to look at, for instance, we can come over here to CoinGlass, and we can go to open interest. We have a whole lesson in, I think it's in the trading fundamentals course. We have a whole lesson on, I call it basically market trade metrics, looking at open interest and funding rates and liquidation and long versus short ratios, and how you can utilize that to get a gauge on what direction the market is betting, and if it's healthy or not. Now we can see, okay, so the funding rate is a little bit negative. Meaning a lot of people, there's a lot of longs going out right now. And we can see that, let's see, futures. This is $156 million. I want to see the crypto. There used to be let me look right here. Give me a second, pulling it up. Can I spell? Can you spell? There we go. So we're seeing this sort of tick up a little bit. This is open interest in US dollars. This is how much open interest. Now we can see right here, we started getting a divergence in open interest right here, where open interest was going up as price action was falling, which is, I mean, it could go either ways because we also see this going up here. But what we want to look at, open interest in funding. There we go. So what I want to see here is when you get the majority of people right here, it finally converted people. See how this flipped red from green to red? The funding rate went very negative right here, and basically it was costing money. It was costing money for shorts. Everybody's opening shorts here. So as everybody's opening shorts here, the market reverses and goes the opposite direction. So it actually becomes more attractive. As this gets scary, you get the best opportunity, and you get this is for people taking leverage trades, perpetual futures, and this sort of thing. We see also right here, everybody goes short. Everybody goes short right here. And this is why this costs more money. That's what these large spikes to the downside are. This is the amount it costs usually about every 8 hours on an exchange. A funding rate is charged for the amount of funding that you took. So you get, I mean, you can see what the number is right there. Aggregated funding rate, 0.0538. That's when it was at its peak. When it's up here, it's 0.0015. Okay, so it's costing money for people to do shorts, whereas people that are leverage longing in these positions, they're getting paid a funding rate from the people doing shorts, and vice versa. This is when everybody's going long. A lot of people are thinking this was a bottom, so people were trying to catch this going long, and this is why it costs money for these leverage longs. Now, where we're at right here, we see this committed every people to go short, slingshot. So what I really want to pay attention to, and I don't know if this is, let's see what date this goes to. February. So yeah, so yesterday, there's a lot of people going long. Now, what I would like to see on this is today, we'll likely get some sort of dip to get people to go short for I don't want to say for a liftoff, but the market tends to take advantage of people in both directions. So if everybody's going long, and the funding rate's positive here, and it's not astronomical, so it's not something that has to happen. But I would like to see a little bit of a dip into negative funding rates, which would mean that the price would actually pull back and commit people to going short, so that we could take advantage so that they can take advantage of the liquidation and liquidity in the markets at those levels to send price back to the upside. So it's important to pay attention to these sorts of things. Now, where was that tweet at? So we are seeing this a lot of open interest in volume for futures. Now, what is that signaling in the markets? Well, let's go ahead and, well, first off, if you are watching over on the the Hit Network 24/7 stream, come over here at some point, give us a follow. It's youtube.com/@BitLab Academy. And you can see that right here at BitLab Academy. Come give us a follow. And yeah, now, some of the things we need to pay attention to this week are cancel. Bitcoin set for bullish week as events approach 40,000 target in sight. This is clearly a little bit clickbait. I don't know if 40,000 is in target. I mean, I know it's in sight in my sort of vision of where it's going, but is it in sight for May? Well, we'll look at that when we pull up the charts here in a second for the TA. Did I see? Let me see. We're getting a lot of engagement today. Shout out to everybody in chat. We got 222 people watching, 101 likes. Hit that like button, hit that subscribe button, ding that bell. What are you doing? Watch this kind of stuff, and not just, all you gotta do is exit out of the live chat, go over there, hit that like button, ding that bell, subscribe, join our community. We're giving to you, baby. Come on. So we want to pay attention to this. So Bitcoin ended the month 29,000, 2% up from the previous club, blah, blah, blah. I had an area highlighted in here. I don't know where it was, but we need to pay attention to this. This is the stuff we have to pay attention to, and why May could be a big month. not only where we're at in the 4-year cycle, but also some major points that are happening. That's interesting. Sorry, I just saw this note from Mr. CC Trower. Says, hello, I know this is a trading show, but I found a really cool coin yesterday. Oh, no, never mind. Well, yeah, I don't want to shill somebody else's coin. I thought he was talking about ChatGPT. I thought he was saying there was a risk. There's a risk issue potentially because it gave people access to smart contracts. But I'll have to look into that. I'm not, since I haven't looked at it, I'm not going to call it out. Need to get that water. But thank you for that. I will look into that, Mr. C. Trower. And Jake Mueller, what's up? Oh, thank you, Jake Mueller. Mueller. Is it Mueller or Mueller? Bueller. Sweet baby saves. All right. So what we want to look at today is, okay, Bitcoin and cryptocurrency market follows a U.S. market recovery. Well, why was this? Why would we get a U.S. market recovery? We need to break down what's going on so we can understand how to navigate. Well, the U.S. market saw a little bit of a recovery. What do I mean by recovery? Well, if we come over here, this is recovery we're talking about. It's not a major recovery, but starting, a bit. If we go on the daily, boom. So you see, this is a recovery they're talking about. This is that same time period. The dollar, look at this dollar getting a bit strong here. Get it with my strong hand. But what we can see is, why did this happen? Well, I've talked about this on the show. I share it on my Twitter. Even though I am almost, not entirely, but I would say 98% solely focused on Bitcoin and the crypto ecosystem, I pay heavy attention to what's going on in the stock market and earnings reports and big tech earnings, and to understand where the risk narrative is going to be in the market. If you don't understand where the risk narrative is going to be, and given that risk narrative is going to change over time, for instance, Bitcoin, if there is issues with any sort of risk at all in the market or bank failures, 8 years ago, 6 years ago, that wouldn't have probably created that much of an impact in Bitcoin as it has this cycle, and it's still arguably if it has or hasn't. But we are seeing liquidity really flowing into Bitcoin while we're getting a number of banking collapses. So now we have a bit of an established history, decade plus. We have major institutions involved. We have BlackRock getting involved in some ways. We've got Google talking about it. We've got, it's on, the Bitcoin white papers on every Apple computer. So there's a lot of involvement and there's starting to be a lot of engagement within institutions and the Bitcoin ecosystem. So when we see the U.S. stock market is performing well, but we're also having issues with banks, and we're trying to understand what's going on. This is one of those things. Okay, U.S. market recovery, is this going to be lasting? Well, we just saw that we had a lot of really good earnings reports and stronger data than expected. But then we also know that we have the FOMC meeting, which is this headline right here, the U.S. Federal Reserve Bank's interest rate decision and press conference. This is the FOMC meeting, Federal Open Market Committee, I think is what it's called. It might be commission. But we have this. We have inflation data for Europe. We have so much coming up this week into next week that we've got to, especially looking macro at the May pump that may happen. If it doesn't happen, it's okay. We'll be prepared. We also have unemployment report and unemployment rate. We've got a lot of stuff coming out. It's funny thing is if we come over here to Fed Forex, forexfactory.com/calendar, we could see, so this is not what I'm looking at. So Tuesday and Wednesday, we have the FOMC meetings, which are, boom. Where is it at? Yeah, FOMC statement. That's on Wednesday Wednesday at 2:00. The At 2 o'clock will be the rate, and then at 2:30 will be the press conference. That's 2 o'clock New York time. But then I think the very following day, if I'm not, so we have job cuts and then unemployment claims the very next day, which is going to be interesting because the question here is going to be, the question that traders are looking at is, when we look at this right here, this is showing that we have an 89.5% of the futures traders, and the probabilities that where people are placing their bets in their trades, the best kind of bet you can make, because that's where you're putting your money where your mouth is. We can see that 89.9%, basically I almost said basically 50%. I can count, I promise you. Basically 90% of the market believes that we're going to get another 25 basis points. The question, I don't think, is whether or not we're going to get that 25 basis point hike. The question is, what is the language going to be at the press conference about this decision? And then I think the following, I believe the FOMC June, I believe it's June 14th. Yeah, okay, so June 14th, 13th, 14th. So the question is going to be, is there going to be a pivot following this FOMC meeting on Wednesday? Now, I want you all to be aware that when we look at these charts and we see what's going on in these charts, let's come over here, just flip over. Got too much stuff on the screen over here. It's distracting me. Unforgettable name. What's up, my friend? Man, I'm so happy with everybody in here. Have you hit that like button? Do it. And if you have not yet, I got to call it out again. People come in at different times. Come over here to BitLab Academy's Twitter page, at Academy BitLab. Follow us here. Hit that retweet button and like this tweet. We draw on Fridays from the people that retweet these, and it's a random day picker. And we basically, you can get lifetime memberships to the BitLab Academy. You get the indicators for lifetime. You can get multi-month. There's a lot of stuff you can get just by helping support, spread the word about what's going on here in the channel. So let people know they can come and learn some things. So where were we at? So we got a lot of stuff coming up this week. That's the point. I want to get into the charts here in a second. So Bitcoin wobbles as U.S. Fed meet looms. Well, there's going to be volatility here in both directions, I think, given that we don't get something that is not planned or scheduled, like, for instance, an actual pause, which I don't think that's going to be something that happens. But in addition to, the FOMC meeting and all this, we also have, is it on here? Well, we have all this info. Let me get out of that. There's not only the Fed meeting, there's another one that I wanted to share with you. So we got, the First Republic Bank, but that's not what I wanted to show. I don't remember what it is. I was scrambling this morning. Oh, this is what it was. So we have the debt ceiling. I don't think that they're going to let us default on the debt, but this is, I feel like this is a little bit of a hopium thing, because this is saying Bitcoin could climb by $25,000 if the U.S. default happens. Well, I do think that there could be an argument that there would be a flight of liquidity to Bitcoin out of the traditional monetary ecosystem if we had some sort of U.S. debt ceiling default. They weren't able to raise the debt ceiling, but this has happened. I mean, I can't tell you how many times in my life they've gotten to the point where they're about to, and the government has shut down for like a month, and then they go and get it done. Now the question is going to be, what's going to happen if they don't? Well, all we can do is be aware of these things and then trade the chart. So let's go ahead. I think, so this is what I was talking about with the FOMC meeting. If we have any signs of a dovish outlook going into June, so we get the FOMC meeting on, it's happening today and tomorrow. Tomorrow and Wednesday. And Wednesday afternoon is when we're going to get their rate decision. And basically then the press conference. The press conference, you're going to see on the day of the FOMC meeting, you're going to see volatility and sort of squeezing into it, and then a sell off, and then a push. It's basically just market chop. Do not FOMO in or FUD yourself out on that market volatility. You should know what your plan is today for the rest of the week, going in both directions. Okay, so no matter what happens, your plan is set before that volatility happens. Now, I do want you to note that I'm never somebody that says you should not use stop losses. However, I will say that going into a Fed meeting, the market, as I said, they do what they can to take liquidity out of the market, and stop losses are liquidity for them. So this is why when we come here on the chart in a second, you'll see, and we've talked about this before, where we have, the push up. Okay, people have their stop losses here. This washes everybody out, and then only to launch higher. So you need to know what your plan is and stick to it. And if you're going to actively trade this volatility coming into the FOMC meeting, then you need to be aware that you may have several stops hit. But that doesn't mean, if you have a direction in mind and then the data comes out from the FOMC meeting very different than planned, you need to be able to pivot your strategy and your directional plan, because you've already looked and mapped out what that directional plan is, so that you can address the chart in a way with a strategy, versus if you don't already have that plan in place, you're going to be addressing it emotionally. So you know what? I'm kind of tired of going over these deals. So let's jump in here to some charts. Okay, let's get the macro view. We got to start with the macro. Okay, we got the Dixie. Dixie here is it's being very frustrating, because we want it just to do this, right? Because this coming down, the DXY, the dollar index, when this is rising, there's somewhat considered a flight from risk. When this is falling, this is considered more of a flight back to risk. So remember in what was it, when we bottomed out and Bitcoin hadn't quite taken off yet? Well, this is right here. See this large fall in the DXY? This is also when we're getting that strong push up in Bitcoin price action. Now, this is, this sort of cooling off period now, where we've kind of just been in the range that we've been in, the $25,000 to $30,000 range. That this has been this sort of whole period here. And now we're just, and it's not just for Bitcoin, it's for the traditional asset space as well. We want to see some determination about what's going to happen with the dollar, and the fact that the debt ceiling, the FOMC meeting, all this is going to be somewhat stagnant, I believe, until Wednesday. And we'll probably get a pretty clear direction about which direction this is going to be headed, because this very well could be forming, and we have to pay attention to this. This very well could be forming a W pattern like this, only to come back up. Do I think that's going to be the highest likelihood? No, I think that's a smaller likelihood, maybe about 30%. But we have to note that we do have some important support here that we are finding, but this is being held below this line right here. So I'm waiting. It's a waiting game sometimes, because right now the big players in the space, and in a good amount of retail too, but mostly the big players in the smart money and the people that are waiting for the data, as soon as that data comes out in terms of the interest rate decision, the market's going to pick a direction. And it's not going to happen in that moment, but you'll see there will be about a 4-hour period that there's some volatility leading into it, and then volatility during it. And then when the announcement is made, and then when the actual press conference happens, then there's going to be a whole nother set of volatility, because of all the specific, it's serious, the specific words that he uses, and whether they stick on Wednesday at the press conference, regardless of what the interest rate decision is. The question is going to be, are they going to say we're sticking with interest rate hikes until we get to 2%? That's going to be a bit more hawkish. Or are they going to say, we're going to do one more interest rate hike and then consider pausing? There's no telling what they're going to say. Depending on how they frame what their decision is going into June will be as important as what the interest rate decision is when it's announced at 2 o'clock. So now that we've seen the dollar, okay, we've already looked at NASDAQ. It's kind of pushing up here, but we have to note Okay. Come over here, option F. We have to note from this move here, this is having trouble. It's not quite getting up to the 618. And we have to note that the 618 is right up here where, this trend line is. So if this very well could still collapse down. And oh, sorry about that. I did not have my screen up. I got the screen out now. Okay, so I got so many things going on here. You guys should see my setup trying to run this little controller with my screen here with this, and then have to balance on the stool. I need to get a new stool because it's a little wobbly. Take some trade profits. I just have to get a new stool. All right, so we can see we need to pay attention to this, because if there does end up being a more hawkish stance on the interest rate hikes, and we see the NASDAQ and S&P 500 finding any sort of resistance and pulling back down, that would be a bit concerning. But as it looks right now, this is finding support on this major sort of zone. This went a little bit past it, but these are regional sort of levels, right? This is pushing up the Dow Jones. It's kind of coming to, ooh, look at this. I just noticed this. What do you see? What do you see? Option T. Look at that. Got a nice little head and shoulders here. Inverted head and shoulders. What is the volume? We don't need to look at that because we want to get into Bitcoin. But this is starting to break out. If this were to break out on the Dow Jones, the reason I'm looking at this when we're trying to figure out what's going on with Bitcoin is because we're trying to see how strong the movements in the markets are going to be. If there's going to be a flight back to investments and flight back to capital, liquidity in the markets, and we're seeing that, that's how we look at it through these indexes: Dow Jones, S&P 500, ES1, NASDAQ. Then we can also very likely look to strong bullish action within risk assets like Bitcoin. We see it also playing out right here on this sort of, this is more of a shoulder, head, and hunchback of Notre Dame shoulder over here. But point being is we are having some bullish impulses here. And so let's look at it. Let's look at Bitcoin. Let's look at all the charts. Let's do it. I'm going to try and spend a fewer minutes on each one today. I think last week I did like an hour on Bitcoin. I didn't even realize that. I just got into the zone. So what we want to do, okay, let's look at our macro. Okay, we know our macro, boom. Now, what I will say is we can see that we had a bearish divergence. This is on the 3-day, but let's go to weekly. Let's actually go to monthly first. Let's start with the big dog. Look at our monthly. Now let's hide all of the drawings. So if we go to the Heikin-Ashi candles, we can see that each time we have flipped green, we've started pretty strong movement to the upside. Now this doesn't look, this is why it's important. This doesn't look that big. We've talked about it a lot on this channel. This was quite big. This is a 100+% move, I believe. Now it's not as big, obviously, as this 300 or 400% move or 700% move, but the trend, these Heikin-Ashi candles really help you identify a trend you're in if you use them. And all you do, and I've talked about it before, just come here, come down to Heikin-Ashi. Now this sort of gives you an idea of what where the average volume is on that candle. And so even if we talked about it last week, I don't want to go into it again. You can watch Friday's stream because we got a lot to talk about here, but we're seeing this sort of move to the upside. Now, coming back onto the traditional candles, I do want to note that we do have a little bit of a roundingness, but we can see right here, we got a bullish engulfing candle. This is basically a morning star doji. It's kind of set up. We don't quite have the doji. It's more of a spinning top, but it's a small bearish candle, a bearish candle, very small bearish candle, and then a bullish engulfing candle that engulfs both of these two prior candles, breaks through this previous resistance, and then we get this doji candle, which is this very, very thin body. You see, it almost looks like a cross because there's basically open and closed nearly the same level. If we look at this, the open, which I can see all these up here is open, high, low, close. That's what these values are up here. So if you put your mouse over a candle like this, you see how these change over each candle. So the open was 23,134. The close was 23,136. This closed $2 apart this is the February candle. The closed $2 apart. but it went all the way up as high as 25,270 and as low as 21,376. And that's what these wicks are on this candle. Now coming here, we can see that we're kind of rolling over here. So although this very well could just continue up, I do want to note that with this on the monthly, we also have these very large relative extrema bars sticking out to the top side here, showing that there was a little, I don't want to call it lack of health in this nature, but there's a little bit of underlying bearish, lack of bullish support, I should say, in this movement to the upside because it moves so quickly. Now, we may see more of this as if we do get a lot of open interest and we get a lot of leverage on the books trading or trying, if everybody's leveraged long, then what happens is if the price gets pushed down just a little bit, then the price can collapse very quickly because they'll be forced to go short, hitting those liquidations. Similarly, a lot of bears were betting on basically, let's bring it down just a little bit. A lot of bears were betting on this area right here to be a level that was going to, I'm going to double click here. I do not like how every time, doesn't matter, paintbrush, there we go. So we could see here, a lot of people were expecting once we broke out of this, that we were going to get some rejection here. Now, if we look back at this again on the 3-day, we could see, or was it a weekly or monthly? The monthly. We could see as we came into that region, as we came into this region, these bars were sticking out. So there's a lot of shorts were put in there. And when we broke through it, a lot of the basically short squeeze happened. So there was a lot of sort of forced buying. So that could have contributed to some of these bars sticking to the upside because we get a very fast movement that wasn't just on balance volume, healthy hidden volume, healthy, the healthy one-to-one spot volume buying, saying, yes, I want that price and consecutively moving up. The short squeeze, meaning people were going short and their liquidations got hit and made price action move very quickly. Then having other people come in on top of that, the short-term holders, sort of weaker hands, buying and adding to that weakness as well, because we're not getting the full support at this level. Now, one of the things that we can look at, if we come here on the 8-hour, we can see that this is that weakness, those relative extrema bars on the monthly. We can come down here. Let's go to back to the daily. We can see that we are getting a little bit of the movements to kind of wash out the weak hands, and we've talked about this a number of times. If we come back over here to favorites, come down here to long-term holder position or long-term holder position change. This is what is really making me excited about May, and that is this right here. This, and we've talked about it. I have a whole tweet about it with 4 different charts, but this is long-term holders adding supply. So they're adding supply to their positions. If you want to, if you want to learn about any of these, you can also come to Looknode and you can scroll down. I believe you, even if you don't have access to these charts, if you scroll down, you'll be able to see this. But there's also in BitLab Academy, the new BitLab Academy, which is rolling out this week, baby. We've got a whole on-chain data course with 20 different on-chain charts in there. We break it all down. But we're seeing strong hands buy these dips, and we're seeing weak hands. That's not one. This one. We're seeing weak hands sell this dip. So when weak hands sell, strong hands. When strong hands are buying from weak hands, that's typically a sign that price action is likely going to move higher soon, because strong hands don't get fudded out in small volatilities in the market. So if the long-term holders are buying on these washout, this washout, and this washout, and this washout, then even if we were to dip here, these are the type of people that add to their positions when the price action is better, because they're statistically not going to sell for 155 days or more. So if this does dip, they're gonna lower their average entry. I know that's what I'm doing. I'm not necessarily selling positions for any of my coins at these levels, whether it's Bitcoin, Cardano, the Graph, Atom, Ethereum. What I'm doing is I'm taking advantage of the weak hands and the weak-minded people out there when price action pulls back to key levels, being where we're at in the 4-year cycle, that these are areas that I am buying. I'm buying anywhere below this, and then much stronger down here at these levels. And I've already talked about that. But as we look at this 3-day, if we look, come on, we can see on the 3-day, this is important. We can see, I'm going to take my face off here. And what I want you to notice, this is with the BitLab trading stack of market intelligence, hidden volume, relative extrema, significant movement, all of which, by the way, we are working, the engineer, Nick, he's working really hard on implementing a lot of changes that we have discussed. And I don't want to tell you what all of them are, because they're quite cool. Some integrations with relative extrema into the price action here, some other color changes, as well as options and simplifying some things, as well as adding other stuff. But we can see that on the significant movement indicator, that this is flipped gray, and it's been gray for some time, which means that this was the best way I can describe this is when you have price action moving up strongly, it can be in the red for some time, because you're seeing strength in stochastics and MACD expanding, and you're seeing MACD starting to roll over. You can see stochastics really, really high. You can see your momentum oscillators as a whole just being very high. And if we looked at it with traditional indicators, you see this. All this is very high. The RSI is very high. Stochastics very high. MACD is up, but kind of going flat. It's not angled to the upside. These are some of the things, and there's several other things within the BitLab significant movement that are all sort of aggregated and algorithmically. It looks at all those different indicators in one indicator. So you can see the momentum indicators are looking very overheated, but overheated doesn't mean you don't have still more push to go. Because remember, we have those short squeeze liquidations. We have other FOMO buyers buying into that. And so you don't sell just because you see red, but you notice that you're looking for the next signal to take for instance, if you bought this, take profit. If you're just trying to trade the swing, then you could buy that, and then you're getting 3 bearish divergences here on the market intelligence. That's what this flag is. With that, then we can come down. We're on the 3-day. We come down to the daily. That would have been about right here. And we can see that this flipped back red on the daily. So this went neutral and then flipped red, and you get 2 bearish divergences and the high pivot. Could have taken profit, boom, to there. That would have been the move, right? So what I want you to point out though is on the gray, when this is gray and we're pushed up to this level and this has gone neutral, this is what we want to see in markets in order for another leg up, is for things to cool off. And so the market has the ability to throw further. It's kind of like, here's a good question. Can you run 100 miles straight? There are people that do it. Not many, but there are people that ultra marathoners, right? If I asked you if you could run 100 miles, most people would say no. But my answer would be, well, I could run 100 miles if I ran a mile a day for 100 days, right? So the point being is, between each mile, you had a rest period. And so when we look at the charts and we look at momentum indicators, and when we go back to the MACD, RSI, and all this sort of stuff, you see right here, very overheated. Right here, the RSIs and the stochastics are, let's not call them overheated. They're very high on the strong side. And all things in markets tend to oscillate back and forth, right? So if this is very high, at some point it's going to have to cool off. And so what happens is, what you like to see in markets is this is very high, and then as this has to cool off, once this gets all the way back down to the downside, this is now higher than it was back here. And so now we have a stronger bullish narrative, and the momentum and strength oscillators are sort of reset, and the strength oscillator held above, basically in the mid range here. It didn't break all the way back down. So we have a strong diving board, boom, to bounce off of to go to the upside. So what we're looking at here, when we're looking at this daily price action, and we see that, when we're looking at the BitLab trading stack, we saw that it went from red to gray, and we can see here, these were all very strong, and these also have moved down into the middle of the zone, which means we're closer to getting we already have more room if we were to go to the upside, because these momentum oscillators have reset. We do see that the MACD had tried to sort of cross, but is starting to pull back down a little bit. It's not the end of the world. That's okay. But the point being with all this is that things are sort of resetting. And even if we did come down to here, this would probably be the most bullish case for this retest to test this level and then come to the upside. And then you have your stochastics reset, but down here on the lower region, the RSI still holding up here above the 40 level. This is on the daily coming back to the BitLab trading stack. We can see the daily. This is looking very overheated. So not only was that gray, we saw on the traditional indicators, which this reads a lot of those and many other things as well, and adds weights and values and stuff to get the readings that we do. But we see that this was unhealthy to the downside. It bounced. This was unhealthy to the upside, meaning these bars are sticking out to the upside, and this is pulling back. So we see this line right here has been a lot of resistance. And basically it's being acting as support. So if this doesn't, option F, so we have a little bit more room to the downside. Just looking at the Fibonacci from this move to this move, the golden pocket, which is it basically looked like it's trying to test. And look at right where the volume node is too, right here, where all this volume traded, all this price action right here. We see this volume represented right here on this price action. And this is coming right down onto this shelf. So if we hold here, this is actually very bullish. This is very nice to actually reset the momentum indicators to give us a stronger movement to the upside. Now, I think there's going to be a little bit of choppiness in here if I had to guess over the next 2 or 3 days. So I wouldn't trust even if this broke down, I wouldn't fully trust that. If this really broke out to the upside, I wouldn't fully trust it. I'd be looking for a pretty quick retrace because of the data that's coming over the next 2 days with the FOMC meeting. But if I had to wager at what direction this would go, this is looking a little toppy like this. However, we're holding strong above this zone. So I'm reassessing below this golden pocket. If we can hold this level here, the 786. If this does drop, I'm not going to short it, but if this does drop down, I would expect that we would test probably down to the highest point if we tested down to would be right at this level, this wick up here. But I think it's probably more likely that we would test into this region here, the 25.4, 25.3 if we do lose this level, because this is a lot of hope that gets lost from the few short-term holders that are there. But when this does come down, I think there's going to be a lot of long-term holders that are buying at the levels down in this zone. So although this level is there with this previous high, this whole orange band here, all these previous highs, I think there's going to be some front running. So yeah, I would say 25.8 to 25.5 would be a probably likely target if this loses this level. If this bounces here strongly, then I would be waiting for it to break this level here, that basically $30,800, and then stair step up 32,000 and then up to 36, I think. Yeah. So that's what I'm looking at Bitcoin. Now we're going to do turbo mode. Let's do Ethereum. Ethereum. You guys ever just sit when you're at your computer by yourself and talk to yourself and just sing silly songs and just amuse yourself? I can do that sometimes and then not realize somebody walked in the room and I'm like, I look like I'm out of my mind. So golden, okay, Ethereum. We kind of looked at the macro already on the other stuff. So let's go ahead and let's mute this. Let's delete the golden pocket. Let's delete the fibs. Oh, because it's just too much stuff on the screen. There we go. Okay, so this is looking like a head and shoulders. And remember, I was saying on Bitcoin a second ago, it was looking a little toppy. That was because it kind of had a similar sort of head and shoulders. But I'm not trusting this in terms of, do I think that this is, let's see what the target is. Measuring from the top of the head to the neckline, which is just basically where the shoulder, head, shoulder, this line of support across that's the neckline. And then we can kind of come like this. Do I think we're going to break down and go down to 1,500, 1550, 1560? I don't think that's in the cards unless there's something very, very hawkish on the markets and maybe a bad you know, huge hiccup with another Coinbase or something like that, then that I could see that. I would think that if this does break down, that it would definitely test this basically 1800, and then next level down 1720, which is this previous high here and this previous low. So this is actually a more realistic target, I think. But we have to be aware that the Head and Shoulders did predict all the way down to the 1550s. So I'd be a buyer. We also have this trend line right here. I'd be a buyer right in this zone right here, because we have this confluence with this line and this previous high and previous low right here. So that's 1723. If this does come down, now it may just be a liquidity grab where the price action comes down like this, bounces, it comes very quick. So it's not something that you just wait till it's there, then set your plan. If that's your plan, execute your plan and have a stop loss on it. But it needs to be your plan, not my plan. Do what's tolerable for your risk tolerance, your risk exposure, your timeline, your horizon. And again, we break all this stuff down in the new BitLab Academy. I'm just going to show it to you all real quick. I'll do it at the end. That way I can, I'll cut it out. But one day, this was to the upside. You see this? To the upside and push price down. Now this pull down here is healthy right now because this bar is within this sort of aggregate momentum health wave here. This is gray, but it's starting to, I can see it getting darker. It's getting towards blue. Let's see what it looks like on the 12-hour. Yeah, you see it's trying to form a bottom, but it's just choppy. It's going to be very undecided about what's happening. So 4-hour, this is looking blue, but this is within the realms here. So I'd be looking for a bullish divergence on the hidden volume, which would be these green flags on the bottom, or red flags or bearish divergence on the top of hidden volume. If we go, this is looking like the things essentially. Remember, blue is similar to when the stochastics and when stochastics have basically bottomed out, and you're also seeing MACD and other momentum indicators indicating a rounding likelihood of a price trend local bottom. So likely bounce. See, blue, likely bounce. Now this was blue the whole way through because this was a strong fall. And so on this strong fall, this bounce was the stochastics and everything still stayed well within the lower limits. And there's many other momentum indicators in there as well, but stochastics is the easiest way to represent it visually when you're thinking about it. Why do I say that? We talked about it. See this? Very low. So this is, yeah, I would say if we don't hold this, if we don't hold above 1800, and we can have a candle wick, but if we don't hold above 1800, then I think we're going to be testing down here, and this would be very healthy. 1720, 1723 level. If we do find sort of some support in this region and then push back up, then we're going to be looking at 1960 as you know, sort of. I mean, really, it's going to be this one, but let's just take this previous high in this region, 1960. I'd be looking at, and then of course we've got that big dog up here, 2145. So we need to play it level by level until Wednesday. Now, looking over here at, let's see, what else did I say I was going to do? Our Cardano. Is this? No, it's not the one. That's not the one. Here we go. The very messy chart. This is just, come on. There we go. So we have this channel that it broke out of, okay, but I hadn't even noticed this. This is, God dang it. So with, I did not notice this. I'm glad we pulled this up. So on Cardano, we had this rising channel that we broke down out of, tested it, retested it, broke down. We had this trend line that we did last week. Remember right here? I think we did it when it was, this is, let's see, daily. We did this trend line. See, Sunday, Saturday. I did it here with this price action. And then we see over the course of the weekend, it was fine. And then finally got rejected off this trend line. And so what we need, we're getting the Head and Shoulders here too. So we're getting the bearish liquidity washout setup, meaning that we have this setup that is looking like, if we come right here, let's look at this sort of level. This would be, this is saying that we are going down from this neckline down to 31 cents, and we very well could. Do I think that's in the cards? If we get, as I said, very bad economic news in terms of the monetary policy decisions, all these sort of things. But I think what's more likely is that we test in this region here, this 37, potentially coming down to here. This would kind of be my idea of probably a low, probably like a 70% chance of a low if we continue breaking down here, which it's, you know, again, it's looking bearish, but this is how they get you. 36.29, 36.50. But if we come down to the 2 hour, let's see if there's any sort of shape up on the small. Yeah, so this is falling down, but this is very healthy. All these bars are within this. We do have the stochastics reset, but there's just some sell-off going on right now in the market. So again, this is what we're looking at there. Now let's look at XRP real quick, because I said I would at the beginning. We didn't get to many of the other altcoins. Tomorrow we'll go light on Bitcoin and Ethereum and Cardano, and we're gonna do tomorrow can be an altcoin focused show, for show. Let's see, what was I looking at? Okay, so this chart actually looks fairly different. I mean, similar, but very different shape than Bitcoin and Ethereum, but kind of similar structure. Push up, stronger push up, smaller push up. So this is looking weak also. Now it's having trouble getting out of the EMA ribbon here. And you see these relative extrema bars? You guys got to pay attention to these. See if this is pushing up? And this is suggesting even right here on this wick here, you could have got out before this drop if you're just trading these movements. And we can see right here on the pullback, is it going to go further? Well, we see the relative extrema bar sticking out to the downside, and this flip from red to gray suggesting it's neutral. And so there's not as much bearish, it's not as overheated, and we're seeing weakness in the bears with these bars to the downside. Now, similarly here, this came down, bounced in this blue wave, right? Everything got very oversold very quickly and undervalued. That's what this blue wave is. And then as this pushes up, as soon as it starts pushing up near the top side of this EMA ribbon, which is this ribbon here, which we have some changes coming to as well. I'm so excited about some of the changes with the indicators. I'm so excited. But as soon as this flips with these sticking to the upside with this attempt, we get not only an evening star doji, right here, I think it is. Yeah. So we have a green candle, doji candle, red candle. This red candle actually should be bigger for it to be the evening star. But we're seeing this doji candle right here showing indecision, and on the indicators themselves, we're seeing this is this bullish attempt lacks strength because this is not within this momentum cloud. So this is showing weakness with the candles. This is showing weakness at how it's interacting with the EMA ribbon. This is showing weakness with the relative extrema. And as soon as that happens, the next tick here on this significant movement flips gray, so neutral. So you're no longer getting the undervalued anymore. So this is looking like it very well could play out to the downside a little bit. So this is on the daily. Let's come down to the 2 hour. Let's go to auto here, double click on the chart. Question is right now, have you hit that like button? Have you hit that subscribe button? Have you dinged that bell? Be a part of our family. We're doing this every day, Monday through Friday. Thursday, I may not be here. We'll figure that out later because we're trying to do everything we can, as I said, to go through everything on. And I'm going to talk more about that in a second to get all the new courses launched in BitLab. So hit that like button, join us here, and I got more for you here in one moment. And we can see here on the 2 hour, we have the bearish divergence on the hidden volume right here, and as soon as that happens, boom, breaking down. So I'm thinking I'm watching this range low right here, about 44 cents, 44 to 40, 44.9 to 44.3. This region right here. If we lose this level, then it's likely coming down another 4 or 5 cents down to 39 cents. And then of course the line, not the line in the sand, but the low that I'm looking at, if we lose these levels, would be the 39 cents. By the way, also has a lot of volume, so this is likely where it's going to end up. If we lose this level, there's probably something bigger at play. We're coming down to the 36 cents. Remember, we still got all the data coming up with what's going to happen with the XRP case. What's going to happen? Are you prepared? Are you involved with it? Are you not? Everybody has different opinions on it. But have you, I don't know, come over here to BitLab Academy. I'm going to refresh this page. Surely more than 18 people have retweeted. Okay. I knew it was higher than that. Come over to the BitLab Academy, follow us, retweet this tweet, and like this, and you'll be entered to win. It's either going to be lifetime access to the courses or indicators, or could be multi-month access to one or both. It could be $100. We give different stuff away every week. And the way you enter is by following this. Another way you can enter, this is going to be different, is coming over to bitlabacademy.com. This is the old site. This is currently still up. You're about to see in a few days, but come and sign up here if you want the notice when we go live, because we're going to let all the people, basically our members and the people on this list, basically get in there first. And we're going to have some different deals and stuff. So come and sign up here. And you also, as soon as we roll out the site, I'm going to restart the weekly newsletter, which you'll be signed up for. Again, that basically I send out some charts, some setups, some general ideas about what's going on in the market. It's not a long drawn out email. I try to do it to where it's just broken down on, fairly quick video, fairly quick email that has all those different things. And when you enter, you also get entered to win free month access to the courses and indicators. And I'll be doing those drawings every Friday as well. So get involved. The new BitLab Academy. Boom. I got a nice little video for you here. And you'll be able to start if you're not already a member, you'll be able to start for free. But there's going to be, it's limited access for the free people, but we want to make sure every single person out there that wants to learn about Bitcoin, that wants to understand blockchain, there's free resources for you to get started and really get your feet wet. And maybe you jumped in too quick and started doing trading and didn't understand the basics of Bitcoin. Go through the Bitcoin 101 course. It's free. And then, then we also have the all access, which gives you access to every course that we have. And there's a lot of different courses. In here, and we're still building more. And these are some of the ones that, the all access. And again, there's a lot more coming. NFTs, mining, smart contracts. There's so much going on within BitLab Academy. So with that being said, hit that like button, hit that subscribe button, ding that bell, go and join BitLab Academy today, because if you get in before we launch, you get to keep the lower price. It's currently $29.99. Price will be going up once the new website is out, fairly soon after it goes out, because we're offering so much more and there's a lot more people involved. We had to raise the price. It's still affordable, but if you join before that happens, you get to keep the current price for the lifetime of your account. And you can use BitLab 15 at checkout for 15% off the BitLab courses or the indicators. You can find the indicators currently right now at bitlabacademy.com/indicators. You can sign up right here. Boom. And then once you're in there, you can go ahead, scroll down the page. This is also the same for courses. Scroll down the page and you just click right here, have a coupon, and type in BitLab 15, press apply, and you can you get it all sorted for you right there. So I didn't have any of that on the screen, apparently. So you go to bitlabacademy.com/indicators, click on the button, and then when you scroll down the page, come to right above payments, and you click have a coupon, BitLab 15, get an additional 50% off, 15% off. This is the indicators, the whole trading stack. And we got so many changes coming to all this, guys. I appreciate all of you. Go forth and multiply your profits. Have a wonderful day, everybody. Adios, muchachos. Adios, muchachos. Thank you for coming. Thank you for tuning in. Adios, muchachos. Thank you for being here. Learning Bitcoin and crypto again and again.